According to reports from CNBC, 75% Americans go at it alone with their personal finances and without the help of a financial advisor or financial professional. Another survey suggests that 60% of Americans are living paycheck to paycheck, and about only 25% actually have a written financial plan. Hello, everyone. Timothy Nihill here with Twin Shores Financial. We are here to talk about why it is important to have and work with financial professionals, whether it be a wealth manager, financial planner, financial advisor, or an investment manager. Not a lot of people out there are properly managing their finances. And I think in today's world, it's very important to understand the importance of why you should have a professional at least aligned with you and working side by side with you and your family and your business, etc. So what we're going to talk about today is really the preface of why you should be working with and have a financial professional at your side or in your back pocket. It could be from an advanced planning side, very, very advanced, complicated situations that come up with your personal, professional, and financial lives. It could be the need for financial planning, which everyone, including myself, I'm, wealth manager and financial planner, and I even do this for myself and my family on a day-to-day basis. On top of that, you should have someone that can help you with tax management and tax mitigation. Taxes are the number one expense and burden that every single American has, and that's, I would say, the starting point to putting more wealth in your own pocket. Returns are great on a statement, but if you really want to build net worth, tax management and tax efficiency is the first place that you start. On top of that, it's investment management is another reason. We're not just talking about your standard 60-40 investment allocation. I own some stocks and I own some bonds. I think we're talking really about real investment management and diversification, not throwing money into a stock market and a bond market and watching a number on a statement. We're talking about real investing, ownership, real assets, things like that. Another reason why financial planners and financial professionals are important is, I would say, liquidity and liquidity analysis. Should something happen along the road during your life, can you handle the impact of that financially, especially if something happens that could potentially harm or be catastrophic to your own financial plan? And that could be anything from death, a disability, having to handle the care of elders, things along those lines. So that's one of the topics that we're going to discuss today is the liquidity of things and the liquidity of finance and personal finances. And then any type of major life event, right? Whether it's getting married, starting a business, having children, expanding your family, having a plan for your own retirement and your own long-term care. And then, along the line, if you have to deal with things like death and disability and divorce, these are all situations that can come up in all of our personal lives from a financial perspective. And it's one of the reasons, these are just some of the reasons, but these are some just major reasons why it makes sense to be working with a financial professional, whether it's a wealth manager, a financial planner, a financial advisor, or an investment manager. So we're going to talk about that in more depth today on this podcast. And then if you want more information on any of these topics, you can always reach out to us at twinshoresfinancial.com. And we're happy to share any information. And we also have a lot of blogs and content and all that other good stuff. So I hope you enjoy the podcast. Please like, subscribe, share with family, share with friends. And if there's any topics we could talk about and have conversations on and share information with, then just hit the comments below and let us know. So why don't we jump right in? Let's talk about, I would say, advanced planning and financial planning and why it's important. Our tagline and our motto with Twin Shores, and this isn't just for ourselves personally, this is for all of our clients, is we want people to live the life that they want to live, right? Like if you sat down and just had a vision for what you wanted your life to look like and the experiences that you are going to have, now, 5 years from now, 10 years from now, 30 years from now, 60 years from now, what is that overall vision for the life you want to live? And that's where it's our job to come in and have an understanding and talk about, the vision with all of our clients. And we do this for ourselves personally, but we talk about this vision is really, what do you want? What do you want to get out of life? What are you seeking? What does your family look like? Do you want to have children? Do you not want to have children? Do you want to have pets? What do you want to do from a work perspective? What do you want to do on a day-to-day basis? And we just, financial planning starts with that first fundamental point. It's not necessarily, hey, I have a 401k and a 529 plan and blah, 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 blah. Like, that stuff is at the end of the day, quite frankly, pretty meaningless if you don't first sit down and have the conversation with yourself and with your financial professional around, okay, here's really where I want to go, and here's really what I want to do. And that drives everything, right? So there's no way that any of us will know what this world's going to look like 10 years from now, 30 years from now, 60 years from now, right? It's just not possible. Like, when we talk with some of our older clients that, are 70, 75, 80, 85 years old, and you're just sitting at the table and you're just, you ask the question, I asked the question, when you were 35, did you envision your life in this world to be where it is and what it is today? And every single person says the same thing. They're just like, never had any idea that any of this would have ever happened. So really, as much as we've been lulled to sleep in our system, in the American system, we've all been put to sleep by a lot of financial concepts that have been passed on over the last generation or two to the next generation. So it's kind of gone from silent to baby boomer to Gen X to, was it Gen Z, Gen Y, millennial, all that good stuff. But I really think we're at a tipping point in where a lot of people are waking up, especially in the Gen X world and the younger baby boomers. And we're all just sitting here realizing that the concepts that were given to us are not necessarily meant to be in our own best interest, and they're not necessarily going to get us the lives that we want to live. And that's why I think financial planning and wealth management is just so important. And I'm not just talking about putting money into an IRA account or a 401k account. Like, that's just basic stuff. So I think it's really, when it comes down to it, advanced planning and financial planning is much different. And you have to take a look at, and this is why it's important, because you have to have a financial professional to help with these conversations. It's like, okay, we have to find out not only what's the life you want to live and how do we get that set up and plan for that, but the second layer of that is, okay, now what's the mentality of you as an individual when it comes to your own personal finances, right? So it goes from, okay, we've had this conversation. Here's what I want to do. I want to have my house and maybe cars and businesses and all sorts of things. And I see that, here's what my life looks at 30. Here's what I want my life to look at 40. Here's what I wanted to look at 60, 70 and beyond. But the second part of that is, okay, now let's take it a step further and talk about the mentality of it, right? And this is why financial planners and wealth managers are so important. And they even separate themselves from financial advisors and investment advisors. And if you go to Twin Shores Wealth Management or twinshoreswm.com, on one of our blog posts, we have the triangle to explain the difference between the two, because in our world, there is a hierarchy of professionals that work in the industry and what they can do and what they can't do, and the solutions that we all bring to the table. And I think the biggest part is it's the mentality and the approach towards money is the single most important factor that is in every equation with every single financial decision that every single person makes across the board. And I think conceptually, our concepts of money and finance are inherited. They're learned behaviors and they're learned concepts. And you have to figure out, okay, so I have this vision for what my life is. What's that life I want to live? And now I have to actually go and execute on it, right? And it's that execution that gets into, okay, what is your personal approach to money? And I would say in all of our history and our experience with in the financial industry across the board with, personal, family, the entire thing, is there's, I think, two ways to approach money and finance. And there are two different mentalities. The first mentality, I would say, is the saver approach, right? And this is the approach that has been handed down, and I would say is the majority of investors and Americans today, and not just in America, but probably across the world. And I call that, and I think and see that as fear-based investing. And what I mean by that is, I'm a pretty big sports fan, been an athlete my entire life. And it's the same with sports. There are two types of way to approach it. Are you playing not to lose, or are you playing to win? And so the saver's perspective comes from, we're playing not to lose. Okay. Which is perfectly fine. So with that, you have to understand that what's the most important factor that is there is I don't want to lose money. Okay. So from that perspective, you now have to build all of your financial solutions and execute on all of your financial decisions to match your financial mentality. What that means is, in our world today, is the put money in a bank, accumulate as much as you possibly can, grow money in retirement accounts and tax deferred accounts, and then figure out how to protect your downside across the board. And that can be done through a whole litany of ways, but it's a very, very, very conservative approach. And because of that, like, if you have the mentality and you're applying this approach of, okay, I'm going to go to work, I'm going to save money, I'm going to accumulate as much as I can, I'm going to have a family, and then I'm going to retire and grow old and have my retirement and then pass on. And then I want to have, my assets passed on to my beneficiaries. Every single thing that you do has to have a protection component to it along the way, because at any point in time, should anything occur that will impact or could impact your finances, it could be a divorce, right? Divorce in this country is absurd. The divorce system is ridiculous. I've experienced it myself. It's absolutely built to the lowest common denominator. I would say the system's geared towards making attorneys money. The court system is completely overloaded with cases. And like when we watch TV, and we always have seen over the years in the past decades, like a mentality of, oh, you could go to divorce court and it's you versus I, and you did this and you did that. None of that matters. The judge barely looks at your case, right? So you could go through a divorce. It could take 2 years. You could, both parties can spend hundreds of $1,000s on attorneys. And then you walk up in front of the judge, and the judge takes 5 minutes to look through the agreement, barely reads it. Hey, this looks thoughtful. Did you do this in 100%? You're 100% in agreement with what you've come together with? Yes. You're 100%. Yes. You both did it willingly? Yes. Okay. Bang, signed off, done. So there's so much that goes into the process that when you get to the end of it, all of a sudden it's like the judge didn't even look at it. No one even looked at the details of the case or the situation, because it really doesn't matter. But the point is, it's a life event that could really substantially impact your financial plans and your financial assets and your net worth. I mean, it literally, on both sides, it cuts everything in half. So these are the things, if you're in that saver mentality, going through something like a divorce is absolutely catastrophic. because you will never recover from it. And should you have to dip into your savings and especially retirement accounts in order to, pay for the divorce, I mean, you're looking at taxes and penalties. Those are the types of things that when you're employing the savers program and that work till you're 65, 70, 75, save along the way, build a house family, all that stuff, you really have to be on top of your game in making sure that you're protected across the board and every step of the way for everything you do for your entire life, because you don't have any outs to make a mistake in that model. If one thing happens and you're not prepared for it, your entire financial situation is changed, and in a lot of cases it's absolutely decimated. So from an advanced planning and a financial planning perspective, the fact that only 25% of Americans have a written financial plan, I mean, just goes to show you how unprepared people are for their lives. And I can tell you from personal experience and observation that if you have the mentality and that savers mentality and you think you're going to get to retirement at the age of, eventually it's going to be 72, 75, and that you have a 401k and that you're going to be able to pay for all your costs and then move on and pass on and leave money to your beneficiaries, the probability of that actually happening is slim to none. It just isn't going to work, and it doesn't work. And we're already seeing the first wave of baby boomers who have implemented this strategy and this type of financial approach, this savers approach. They're absolutely getting decimated in retirement because they never took into account the time value of money and how money and currency depreciates out at 12% year over year. And it has, at least in this country, in the United States, 12% a year, year over year since 1932, 33. So, when people are thinking, oh, inflation's only 3%, it's like, no, it's actually 10 to 12 every year because your currency devalues. And there's nothing you can do about that. We have a growing population, right? So as the population grows, well, the amount of money that people need grows too. So, there's productivity and all that other stuff, but at the end of the day, the utilization and the need for more money presents itself. And just by default, you have currency devaluation, which is a natural part of the process. So that's why I think advanced planning and financial planning is very important, especially from, the saver point of view, the saver mentality. There's no good or bad. It's just, you have to understand what your approach is. And then because of that, you need to know how to make sure that what you're doing is going to carry you for your entire life and get you that life you want to live. And that's why in that world, it is absolutely 100% necessary that you have a financial professional. It doesn't matter. There is no out on that, because only a financial professional can bring you the right solutions to protect your assets from catastrophic things that are going to happen in your life, because you're not going to be able to predict your future. And only then will you have what's necessary in place to get you ultimately where you want to be. Because only financial professionals have access to the tools, products, and resources to accomplish that. So if you're out there and you're like, yeah, I have that mentality to myself, and you're not working with a financial professional, I would say you should start talking with someone and go find someone that you can at least sit down and have the conversation with. Because, you're probably going to find there are definitely holes in your finances, and there are probably some really, really big holes that you're not prepared for. So part 2 of the advanced planning side is, let's talk about the secondary side of things, and those that have more of an investor mentality, right? And I would say that those with an investor mentality tend to be more free thinking. They do not believe in anything that's saver related. Like if you look at it, I have an investor mentality. I have, for myself personally, I have no fear of going to zero because it'll never happen. Because I 100% invest in myself first and foremost, and through that becomes the production of the investments that will contribute to the life that I want to live. And that's a case for a lot of people with the investor mentality out there. And I would say that the mentality is becoming more mainstream. It's becoming more popular. And especially when you get to the younger generations, like into Gen X, Gen Y, millennials, etc., we're starting to see a lot more people that are rethinking the way traditional finance has been done. I think a lot of us have watched what's happened with our parents and grandparents. I recently had, my mother-in-law pass away, and I watched my wife's family have to deal with a lot of expenses and elder care for her, which they were not counting on. Those types of things show up that if you're not planned for, they can become catastrophic to someone's financial plan, especially those with that saver mentality and that saver approach. But then at the same point, from an investor mentality, something like that happens. That's one of those things where if I have a financial professional, I already have it accounted for, right? So I'll share my personal experience as, I guess, is probably the best way, because I have this type of mentality. To me is I want my investments making me money while I'm sleeping. And I know through my personal experiences in the financial universe, in large corporations, and yes, even at BlackRock, because we all like BlackRock these days. I was inside those four walls, so I don't think people really understand what actually goes on in finance until you see the inside of something as big as a JP Morgan, Goldman Sachs, BlackRock, etc. And it's a learning that it's a fundamental learning that honestly, money is made up. It's fake. It doesn't actually really exist. Yes, it's a concept. It's a medium for exchange, but cash and currency is not an investment. In my world, there are different levels and layers to investing, right? And so everyone has the base layer that they start at, because when we all graduate college at the age of around 21, whatever, our financial assets and our financial capital is pretty close to zero, but our human capital is close to 100. So we have 100% of our human productivity available to us. So when you're looking at that from an investment perspective, when I talk with people, is you want to graduate from the saver mentality into the investor mentality. And what I mean by that is you want to get into a situation and into a world where we just talked about, I know that my money's making me money while I'm asleep. So what do I mean by that? I'm not worried as an investor. My stock market investments, my I would say shoot the moon strategy, my gamble is market money. It's the stock and bond markets. Because at the end of the day, we really don't have tangible ownership, especially if your money's going into ETFs, right? Like, you don't have voting rights, you don't have shareholder rights. Those are owned by the large financial firms. Now they're starting to unwind a lot of that for a lot of different reasons. But if my money's in the market, for example, there's this game, the up and down game, which is fine. I'm okay with that. Because what I have done is I have my financial assets at the bottom are in investments that are paying me cash, right? So I started off looking at things and saying, okay, how can my investments pay me cash, right? Because my concept of retirement as an investor with the investor mentality is I'm not waiting for my retirement till I'm 65, 70, 75 years old. My retirement begins the day that my investments and my financial assets are paying for my expenses, right? Think about that one. So I don't necessarily have to go to work every day if I don't want to. Why is that? Because I employed capital from the very beginning, and I started building investments that were paying myself cash. And then I took those investments and I bought more investments that were paying myself cash. And I kept doing that and laddering that until you build the baseline to where you're like, okay, my investments are paying for all of my expenses. I actually don't have to go out and work a 9-to-5 job anymore. I don't have to work for somebody else if I don't want to. Now I have that absolute choice to do so, and could do it right at that point in time. I could keep, I could keep working for someone else and making some good money at these large financial firms, but I decided I didn't want to do that. I decided that, I just want to work for myself and do what I want to do, because for me, this is fun. This is what I've been doing this stuff since I was about 7 years old. When you have the investor mentality is more along the lines of coming to an understanding that, okay, I'm really looking for my financial freedom as fast as humanly possible. So what does that look like? And when you sit back and look at the way things are structured in our systems today, it is not putting money into a 401k. It's not deferring taxes until I'm 65. It's putting my money together today, getting it making as much money as humanly possible. So it's creating my freedom. And then it's managing my taxes. So I'm keeping as many tax dollars in my pocket as possible, so that I'm building my net worth as fast as humanly possible. The other part of that is, in playing the tax game, it's ownership. I don't really want to own anything, right? I want to be an investor in all things, but I don't want the ownership necessarily, because the second I take ownership of something in possession, that's when the huge tax bills come in. Now, there are so many different ways you can mitigate tax bills, whether you're a high income earner or you have large capital gains and all that other fun stuff, because that's really where the fun begins in the financial world. But when you're within, you get that investor mentality, it's really to a point where I know that fundamentally the foundation of my financial house is generating enough income to where it's paying my expenses. So then it's freeing up my decision making, because I don't have to worry about paying for, my family. I don't have to worry about paying for cars and all that stuff, because my investments are doing that for me. So now I have the freedom to go do what I want to do on a day-to-day basis. And then along those lines, you just get into more sophisticated planning, more sophisticated estate planning, more sophisticated financial planning, more sophisticated investment management. But at the end of the day, investment management is like the last thing in the world. But it's really, from the investor mentality, I'm an investor. So I just, it's almost like when I'm on the Monopoly board, I'm trying to buy up everything across the board. So then everybody else that's going around is paying for my lifestyle. And that's a mentality shift, because you have to have the understanding that nothing's ever 100%, right? You're trying to tip the game in your favor. You're going to have some great ups. You're going to have some downs. But the whole point of it is, if I can build the cash flow and the reinvestment, and then I can keep as much of that in my pocket by managing my taxes as efficiently as possible, I'm creating my financial freedom today versus waiting for it at some point down the road. The era of free money from 2008 to 2022, 23 is coming to an end, and we're all seeing, the results of money printing. Some of these 20-30 year S&P 500 returns are not going to happen. And we now are living in a world where we literally are operating under two separate financial systems. So I think now more than ever, especially from an advanced planning perspective and a financial planning perspective, not only are most people underprepared, but I think now more than ever is a crucial point in time where you have to be working with a financial professional. You have to have someone in your back pocket. Even if you're part of the older generation and the silent generation and the older baby boomers, like, you've had a run up of 40 years where all of your assets have gone through the roof, right? Oh, I bought a $500,000 house in Boston, and now I want to sell it for $2 million. Well, guess what? Uncle Sam's knocking at the door asking for, 20% on $1.5 million in capital gains. So, you have to have someone in there to help you. If you're of that older generation, you have to convert your financial assets back into money so you can pay for your funding your retirement and the rest of your life. You need to have someone that is helping you keep as much of that money in your pocket, so you're not writing massive checks to the IRS. Like in that last example, that was $300,000. I mean, can you imagine what you could do with an extra $300,000? So I would say from an advanced planning perspective, now more than ever, people need to be working with financial professionals. So whether it's an investment manager, financial advisor, financial planner, wealth manager, now more than ever, 2023, 2024, 2025, you need to at least have someone that just can say, hey, you know what, this could work, this couldn't work. Even if you're not working with them 100% on 100% of your things, at least on 25 to 50% is a really, really good idea. So to close this out, and in summary, I would say it's imperative, as we've talked about, to have and work with a financial professional, at least have one on your side or in your back pocket. But it first and foremost, I think, starts with financial planning and advanced planning. And once you have your vision of this life that you want to have, you need the finances to support that. You need your money and your investments working towards your goals. And that's why it's so critical to have a financial professional. So then you could have the conversation. Here's the vision, come up with the plan. And then the biggest piece of them all is the approach to money. It's the mentality of money. And it's, am I a saver? Am I an investor? Or maybe I'm a little bit of both. And a financial professional is going to help you figure that out, because if you can get the mind right and the mindset right about money and investing and planning, it's a massive, massive weight that you could have lifted and get lifted off of your shoulders. To then you're not worried about your day-to-day, man, I'm going to have enough money for this or enough money for that. You're just like, I'm good. I'm prepared. I'm feeling really good about my finances. Now I can focus 100% of my energy on exactly where I want to go and where I want to be. So thank you very much for spending this time with us today. For more information and, on this topic and other topics, wealth management related, please go to our wealth management site at TwinShoresWM, as in wealthmanagement.com, or follow us on Instagram, Twitter, YouTube, and look us up under Twin Shores Financial. And as I said before, please like, subscribe. If there are topics that you want to hear more about, drop us some comments. And if you have any questions, we're happy to help. So thank you very much and have a tremendous day.